From our Stars and Dogs segment, it's time for this week's Star. Now, our star of the week from our Stars and Dogs segment is International Road Dynamics, Inc., IRD, on the TSX. This company was a great winner for us already this year and for our clients. It's a company that we actually cover and have recommended in January of this year, just in January, at a price of $2.36. The stock has jumped 80% from that level and 50% this past week on a takeover bid. So what does IRD do? They are a highway traffic management technology company specializing in supplying products and systems to the global intelligent transportation industry. Their products include anything from automated truck weigh stations, toll road systems, integrated traffic controls, permanent weigh in motion systems, and operations and maintenance of truck weigh stations, toll and traffic data collection systems, among other things. The company owns over 60 patents as well. Now, our buy thesis on this back in January was, first off, that revenues had grown from 42 million to 58 million, and earnings had jumped from a loss of 5 cents to 18 cents per share over the past 4 years. The stock traded then around 13 times earnings and expected organic growth in the double-digit range moving forward with the potential for acquisitions with a solid balance sheet. So we had a stock trading well below the market average price-earnings multiple with above-average growth prospects. So that's what we define as growth at a reasonable price. Now, we would have bought this company regardless of a blue sky upside from potential infrastructure spend with the unexpected Trump presidency. But this added some blue sky potential, like I said, and his planned infrastructure spending, if it came to fruition, was something that would be a real kicker to this stock. Now, if we look under Trump's plan, essentially as it's written, the federal government would offer tax credits to private investors interested in funding large infrastructure projects who would put down some of their own money up front, then borrow the rest on the private bond markets, for example. They would eventually earn profits on the back end from usage fees such as highway and toll bridges. So instead of paying for their new roads at tax time, Americans would pay for them during their daily commute. There's not a big appetite for increased taxes to pay for these, so these user-type fees potentially could be a way to go moving forward. And of course, all these private developers would earn a nice return at the end of the day. And how do they earn that return? Well, they use toll systems, weigh-in-motion systems, which IRD is a market leader in, and they enable intelligent highway systems. So we saw IRD as well-positioned for growth with deteriorating infrastructure across North America and throughout the world. Now, this past week, a large investor, I've identified this opportunity that we saw in IRD and then announced that it had entered into a definitive agreement to acquire all of the issued and outstanding shares of the company for $4.25 in cash, or an equity valuing the company at around $63.5 million. The purchase price represented a 51% premium to the closing price on April 13th and a 35% premium to a 90-day volume weighted average trading price. The company that is taking it over, we are also familiar with. It's a TSX listed company called WILAN, W-I-N, on the TSX. They're making it an all-cash bid. While we intended to buy and hold IRD for 3 to, say, 5 years, given the attractive valuation point at recommendation and the growth paths that we talked about going forward over the next 5 years, the 80% guaranteed return was too difficult and is too difficult to ignore. We believe the $4.25 bid near to midterm is more than a fair price. In that regard, specifically, IRD generated $65.4 million in revenue in fiscal 2016, $4.9 million in earnings, or EBITDA, and $2.8 million in net income, and $2.3 million of cash from operations. So the enterprise valued EBITDA multiple at the takeover price of $4.25 paid by WILAN is in a range of 13, which is not cheap. and it's around 23 times earnings, which is well above the market PE. So with the 50% jump this past week and the 80% gain since our recommendation in January of the week, this makes IRD, or International Road Dynamics, our big star of the week, and we're pleased to produce that type of gain in such a short term for our clients in this company. So we're recommending our clients tender or sell the shares in the open market, and our clients have received the full report on that earlier in the week.